Hi, and welcome back to our channel, Pay Down Debt Solutions. I'm Jen, and I'm back today to talk to you guys about more Velocity Banking fun. So I hope you guys had a chance to catch the interview that Mr. Knott did for us the other day. That is Not Your Average Finance Guy. It's a channel that he runs, and we've kind of bumped into each other, over the course of the last few months. And I think he does a really nice job with his channel. And I was really honored when he said he'd like to do an interview. And so Dan and I sat down and did the interview. Today, I would like to talk to you guys a little bit about tips and tricks with Velocity Banking. And Dan was going to run a video for you guys today. He's feeling a little bit under the weather, so you're stuck with me today. So I have told you guys in the past that, frequently I will kind of take and test, Velocity Banking strategies and test different things. I've, tested 0% credit cards and, come across a couple things that I wanted to share with you guys that I've found. And so, I'm thinking about also, if you guys are interested, and let me know if you are, either in the chat or please, by all means, send us an email. You can see info@paydowndebtsolutions.com. Kind of thinking about maybe running a quarterly newsletter that I would email out to you guys, only if you're interested. I'm not going to spam you. I'm not into that. So I'm not going to do that to you guys. But if you think you want to be part of the quarterly newsletter, then just send us an email, and in the subject line, just put newsletter, and I'll kind of, get people added to that. And maybe I'll send one out quarterly. And if we get more, maybe monthly. But right now I'm thinking quarterly. And just to kind of catch you guys up on things that we see out there, things that might impact Velocity Banking, any banking news, interest rates, things like that. So if you're interested, please shoot us an email and let us know. But today, let's go over some tips and tricks regarding Velocity Banking and the tools that we use, and little things I've kind of picked up and learned along the way that we can use. All right. So make Velocity Banking work for you, right? So you don't necessarily need to, work for Velocity Banking, but you can make Velocity Banking work for you. And the beautiful thing about Velocity Banking is the different strategies that are out there and the different ways that you can run your finances. You don't have to use one method. There's many different methods with Velocity Banking that you can use. And I think that we talked about in the interview where if you guys don't want to use your savings account to pay down your debts, you don't have to. Could it be the best thing for you at the end of the day? Yeah, maybe. But you know what? There's a whole lot of ways, like different paths to get to the same destination. And so I think that that's one of my favorite things about Velocity Banking. And so I want to make sure that I, reiterate that for you so that there isn't just one way. So you can take whatever, pathway you want to get there, whatever is most comfortable for you. All right. So a line of credit it's a debt tool, and it's a gift when it's used correctly. And I really and truly believe that, because when I found Velocity Banking, I was blown away, right? It made so much sense to me. And I've, known how lines of credit work, but never have I imagined you'd ever run it quite this way. And so learning how to use lines of credit, and that is credit cards too, right? The credit card is a line of credit. That has just, changed our life so dramatically. And so, we're bringing it to you guys, teaching you different ways and different strategies within, the realm of Velocity Banking. Okay. So when you run a line of credit, so when you run them as a debt destroyer, right? So when you pick one, you run it as a debt destroyer, you would then work down your debt through the cash flow that is released by combining those payments out there, and the payment that you are going to make on that debt destroyer, that is what becomes cash flow when you run all of your finances through your debt destroyer. Okay. So I know that's kind of a hard concept to get. And I really, during the interview the other day with Kyle, I really realized that, that is something that does trip people up a lot, and they don't really understand how that works. But when you overpay and when you use Velocity Banking and you put all of your income in, the payment that was due on that card then is satisfied. So it comes back to you then as cash flow to help work down that card, plus any other cash flow that you might have out there. Okay. So all of that together works through that debt destroyer to help pay it off faster. Okay. So that's really how it works. So what you do is you're turning your loan payments. When you turn loan payments into cash flow, And you do it by absorbing them into your line. Okay, that is one way that you can use your debt destroyer. All right, you can also use multiple lines of credit or credit cards, right? So not just personal lines of credit or home equity lines of credit, okay, or business lines of credit, right? You can use multiple lines of credit sometimes to work down the debt at the same time. You can do that simultaneously, or you can pick one and do one at a time. Like Mr. Knott said, one foot in front of the other. Take one thing, start with one thing and do that first, and then move to the next, and then the next, and then the next, okay? So you can use one card to pay off another, or use Plastiq, okay? And the question becomes how, right? So how can you do that? How can you use one card to pay off another, or how can you use Plastiq to do this? So a little trick that I found not too long ago. Right now, you can't use Plastiq to pay credit card to credit card. So you can't take one credit card and pay another card with Plastiq. You can take a chunk payment, though, off of a credit card and pay using Plastiq and pay down your mortgage. That you can do. So you can take a card balance and use it through Plastiq to make a payment to a mortgage company. You can pay for other things. And that's what I want to talk to you guys about this way. So you can't, again, use a payer service like that to pay credit card to credit card. But what you can do is something different. That is, something I found really interesting. And remember, with Velocity Banking, and what we try to do is teach you guys how to think outside the box. I am learning every single day different things that you can use and that you can do to help think outside the box, right? So this is one of them. This is a Plastiq trick that I think is pretty interesting. And I've been reading that people are doing this very successfully, okay? So what is it? What is this trick that I'm talking about? Okay, so let's take a look at this. So you can use Plastiq to make a chunk payment to companies, okay? So to companies or businesses. Now, you cannot use it to pay one credit card off with another unless, right? Unless, there's a but here. Unless you own a business. So, do you have a business account? If you have a business account, this is a way that you can actually use Plastiq to pay one credit card off and put it on another. Now, how does that work, right? Because, and that's another thing that trips people up with the 0% credit cards, is how do you get money off of one card and put it on the other card? Like, what does that look like, right? Well, this is exactly what it looks like. So let me explain. So who might qualify for this way to pay Plastiq, right? Or way to take one of your credit cards and pay off another card without getting a brand new card? There is a way to do it, all right? And that is if you own a business and if you have a business account. So here's the thing. Who might qualify? Well, do you run a daycare? Maybe you run a daycare. If you run a daycare, that's a potential. If you have a business account then with your daycare's name on it, that is one business that might qualify. If you run a consulting firm, so if you have some sort of consulting firm that you again have a business account for, that's another way you could do this. If you own a practice, be it a legal practice, a doctor's office, right? If some kind of practice, you can do it because more than likely you have a business account, okay? If you are a landscaping company, you probably have a business account. If you are a contractor, you probably have a business account. If you are a farmer even, right, you probably have a business account. If you have a sole proprietorship or an LLC or a corporation, okay, so if you have one of those, you could then have a business account, all right? And so the business account then, what happens is when you go and get a business account, whether you're a sole prop, whether you have a limited liability company, or whether or not you're a corporation, okay, you're going to open a business account in the name of that business, and you're going to get paper from your state. So the state that you live in, you can file and get an LLC, a sole prop, or a corporation, depending on what your business looks like. Okay, and for us in Michigan, I think it's $25 to file. Okay, so it's really inexpensive, something that you can do, and then you can start a business account. Okay, if you have any one of these things, maybe you do some small side job, or maybe you clean houses, and maybe right now they're just giving you cash for that. Open a business account. Open a business account for yourself. Do it as a sole proprietorship if you want to. You can still get a tax ID number for that. And then you can go ahead and open a business account, and maybe you can transfer one credit card to another using Plastiq, okay? Because lots of times, we know that Plastiq works for rent payments, okay? So if it works for rent payments, if you notice, a lot of these management companies are an LLC, so you make your rent out to an LLC. The same thing. So what happens is Plastiq will pull money from the card for you, and then you tell Plastiq where you want that check to go, because they're going to write a check out into the name of the business. And then you would then deposit that check into your business account. So that's exactly how it works. Now, Plastiq cannot, you're not allowed to pay yourself. So you can't make that check out to yourself. You can't take it from a credit card and then have it pay you as an individual, especially because the card names will match. You can't do that. So that's not something that you can do. And Plastiq frowns upon it, and they're not going to let you do it. So you can't. But again, thinking outside the box, this is an excellent way where you might be able to take one card and put it on another card, right? So what does that look like though? So what happens is you're going to get a check made out to the business. You deposit it into your checking account, right? The business checking account. And then you take the money from the business checking account and you'll make a payment to that card. That's how that would look. And as far as Plastiq knows, it's a payment you're making, for maybe it's childcare, maybe you're paying of the year up front. Maybe it's your landscaping, you're paying that up front. Just like when you take a chunk off of it to slap down on your mortgage and make a payment to your mortgage, or I'm sorry, a principal payment to your mortgage so that you can run it the Velocity way. So think outside the box, guys. That's another excellent way. So another way you can do this is, what if you have a 0% card that you're currently running and so it's 0% for 12 months, okay? So you've got this card, maybe your balance is, 6,000, maybe it's, 2,300, doesn't matter what the balance is. So I found this out the other day and I thought it was really interesting. So I had a card, and like I said, I do little experiments that I transferred a balance onto a 0% card, okay? And in my case, it was a Bank of America card. So I transferred a balance onto a card and I worked it down, okay? So I had some balance left, and I started thinking about, different ways that maybe people could, take and move cards over, okay? So I get these checks in the mail from Bank of America saying that I have, they were giving me these 0% balance transfer cards. And I'm like, that doesn't make sense to me because I already have a balance on there. Why are they giving me these checks, right? I didn't open a new card. I don't have a new card. So it's not like I'm opening a new card and getting that 0%, right off the bat, because that's how most of the cards work. You have to get a new card, right? And then they will give you a 0% offer with that so that you can pull other balances over onto their card. So that's how they want it to work. All right. So this didn't involve me getting a new Bank of America card. It involved me having the same card, and they were giving me more convenience checks. So I decided to call. And I called and I got a representative on the phone, and I said, is there a way that I can get more convenience checks? Do I have more convenience checks available to me? And, and the guy said, yes. I said, even though I am currently on a 0% offer and I have a balance still left to pay. And he said, yeah, you can do that. And I said, so you mean to tell me that I could, pay this card off or not, and I could still move more balances over? And he said, yeah, you can. And he said to me, also, would you like to raise your credit card limit? And I said, all right, so what does that entail? And he says, well, I just, ask you what your income is. And then we just put a review in and it comes back. And I said, well, how long does that take? And he said, oh, you'll know in like seconds. And I said, okay. And he goes, well, how high do you want it? And I said, I don't know, give me 5,000, give me an extra 5,000 on that card. So he puts it in, comes back, boom, I get 15 grand right then and there, new 0% offer that now I could take another balance of some sort and put it on that card. So I thought that was very interesting because sometimes you have to get a brand new card to get these 0% offers to take advantage of them, especially when you already have a balance. So I could either then pay off that balance that I currently have, right? My income in could take care of pay that balance. And then I could use this other balance to absorb or pay for something else that I want to move over onto that 0% card to halt the interest. So that's another way that you can do it. So if we did that, what would that look like? So I ran a hypothetical for you so I could give you guys an idea of what this might look like, okay? So if in my hypothetical scenario here that I actually did and called on for you, if I had an income of, let's say I had an income of $4,100. Again, just arbitrary numbers. I'm just grabbing numbers, right? So if I had an income of $4,100 and I had total expenses of $3,800, okay, and I have a cash flow, let's say, of $300. So let's say I rent. Let's say I put rent and car together, and that's $1,300. Okay, so we know that I can't pay that monthly through the card. Okay, so I have to hold those out into my checking account, and I run all the rest of my chargeable expenses. I also have to hold that out of my income. Okay, like we always talk about, have to hold that out of my income. So then what happens is my available income. Oops, I put an A there. My available income is $2,800. Okay, so if this is my income, all right, minus my the things that I can't pay through a credit card, and I have to hold it out into my account, that's what I'm going to hold out. So currently I have to hold out both of these, right? Both of these cards. So if I have card A or card 1 and card 2, and let's say it's BOA and Chase, I have to hold out these payments also. But in this case, I'm going to be taking care of them, so I won't need to do that, all right? So now, I won't need to hold these ones out. They will actually come back to me. All right, so if I have chargeable expenses then, so what are my chargeable expenses? Well, currently my chargeable expenses would be $2,160, okay? So $2,160 is what my chargeable expenses are. But I'm going to take advantage of this 0% offer that I've been given these convenience checks for. So if my balance was $2,300, again, just grabbing a number here, $2,300, and let's say my payment is $69. Now remember, these 0% cards, you have to pay something. So you can't just, put money on a 0% card and sit there and do nothing for 12 months or 18 months or whatever the 0% term is. You have to make a payment. And typically, again, as I talked about it in the DTI video I did the other day, it's going to be 1% or 3%. Those are usually what that payback amount is. Now, that is just working down your balance, right? Because you're not being charged an interest. So the money you put towards that card just works down the balance. All right. So if it's 69 in this case, okay, and let's say this Chase card that I have, let's say it's at 22% and I have $12,000 on it. Now remember, I'm going to be charged. So if there's 12,000 on this, I'm going to be charged to do this transfer to the new card. Okay. So remember, my limit's going to be 15,000. I am going to be charged 4%, and they told me that. So I think the original amount I want to say was 3% to do the balance transfer in the first place, but it was 4% in this case. So there was something, apparently maybe they charge another percent for the second time you do it. I don't care, but in that case, what difference does it make, right? Because I'm still accomplishing my goal, knowing that I'm going to use Velocity Banking. So then my balance is going to be 12,480, right? So 12,480 would be my new balance with that charge on it, because I've already paid this off. I paid this off with my income, okay? So then I've got this left over. So my new payment then is going to be $375, because again, I'm just saying that if I have, if Bank of America is going to charge me 3% as my, payment that I owe every month, let's just say that's what it is. So let's say it's $375 then. That would be the new payment that I'd have to make, all right? Which means my new chargeable expenses is $2,125, okay? Because it's still something I'm responsible for, right? So we got rid of this one, right? But we still have new chargeable expenses of $2,125, all right, when you look at the numbers. So old chargeable expenses, $2,160, but with this new payment and this new 3% interest, my new payment's $375. So then I have to subtract those out of my expenses. All right. So what does that look like then? So again, for those visual learners like I am, I wanted to graph it out for you. All right. And mind you, by the way, so this Chase payment, to pay it back at the $340 was going to take 4 years and 10 months, which means my interest that I'm going to be charged would be $7,490. Okay, so $7,490 is how much I would pay on that Chase card if I didn't move the balance. But I did move the balance, right? And I moved it to a 0% card. So that means I no longer am going to owe this. But how long does it take? Okay, how long does it take to run this down? Well, here are my numbers here, and I show you. I start with $12,480. I subtract my income, because remember, income in, right? Expenses out. So with Velocity Banking, The thing that makes velocity banking so amazing is the fact that when you park your paycheck or your income onto that card, you're using all of that money to drop your balance immediately, which means your average daily balance then, when you have an interest rate, and in this case we don't, would then be lower, right? Because we know that lines of credit are figured on an average daily balance. So that means that as your balance comes down, the interest rate comes down, and it comes down fairly quickly when you make income deposits onto that card, okay? So it comes down very quickly, and that's what helps make velocity banking work so well. So if I start at $12,480 and I put my income in, and let's say that's going to be $2,800, that means I drop my balance to the $96.80. Now, if I had an interest rate that I needed to figure out what that was, I would have to add my high balance, I would have to add my low balance. Okay, so I'd add them together, I would divide by 2, and then I would multiply it by the percentage rate. But I don't have a percentage rate right now, right? So I don't have that. So if I go ahead and run this down, right? So if I go ahead and run this down, how long is it going to take? All right, that's the question. Well, so now I have expenses though. The expenses have to come back in because I still am running my expenses through here, right? So the expenses come in, but there is no interest, all right? And there is, so that drops it to $11,805. Then I have the direct deposit or the deposit come back in of $2,800, drops me down to $9,005, and so on and so forth. So here I go ahead and I work this through for you. All right. Now, some of these cards offer 18 months. And if this was an 18-month, if this card was on 18 months, it is going to be pretty cheap for me, right? It's going to be pretty cheap because at the end of the day, this then would take me 15 months. Now, this card in particular, and then it would be 0, right, if it was 18 months. Well, this card in particular gave me 12 months. So I would have, 3 months then that I would have to pay interest on. So it's going to be negligible at that point. And let's say the card goes to 23%, 24%, 29%, whatever it goes to, because my balance is going to be so low by the end of those months, it's going to be negligible. Maybe I'll pay a total of like $80. So it's going to be very small. So these are some tips and some tricks that I wanted to bring to you so that we can continue to think outside the box and come up with ways as a community here, right? As people, as students of velocity banking, ways that we can pay these by thinking outside the box, using velocity banking and getting done what we need to get done to help ourselves get out of the payment poor situation. I hope you guys learned something today. I hope you found this, educational. Keep thinking outside the box. I'm going to keep bringing those, ideas to you so you can see how these, ideas work and how, I'm hoping other people will bring ideas. And that's the idea behind the newsletter. So I'm thinking about doing that. And if you guys are interested, send me an email, just put newsletter in there and I'll add you to my list. And then when that comes out, I'll start sending those out quarterly. Have a great day, guys. Thank you for watching.